All right. Welcome to the Trading Pit, your virtual gathering for all traders. Man, we've got an exciting show today. I got two of my favorite guests here, JJ and Benjamin. We're going to unpack what's happening in the market. And, you know, if you're looking at the market, you may be asking yourself, what exactly going on? It looks like we've got some consolidation. Bitcoin's looking at 42K. I've got Ethereum looking at 2270. And man, there's just a lot of stuff to unpack today. So let's get right to it. JJ, I want to ask you, what is the mood of the market? What are we looking at here?
A little bit of panic here this morning. There was the ledger hacks. So some sort of protocol vulnerability on ledgers where it was draining wallets that were interacting with any dApps. So we saw kind of a quick liquidation run down there in the morning session. So this dropped down. We were around 43,000 earlier this morning, dropped down, took some longs out that were chasing yesterday after the big pump after FOMC. It seems to me like this is more driven by options positioning. So if we look here.
Hey, before we jump into that, I just want to go back because we start off with some really big news. Just go back and explain for the audience, what exactly are we hearing with the ledger? Because I don't know if it's been confirmed yet, but it sounds like the information coming out is that there's a vulnerability in the ledger wallet. So anybody who's using a ledger wallet and is using a dApp is at risk of losing their funds in that dApp. Is that right?
If they interact with it, I just saw a tweet that it was fixed. I don't have too many details on it. All I know is like if you were interacting with a dApp, you were liable to get your entire wallet cleared out. Benjamin, you know anything additional about that?
Yeah, so basically how this works is that your funds are sitting in a hardware wallet. And if you have to connect ledger to a dApp, you have to go through a code base, right? So it's a connector. So the connector is a human written code and different people contribute to it, different team members contribute to it, and the code is basically pushed. So the connector basically has versions and variety of dApps basically integrate that in their front end so that anyone who's using a hardware wallet is now able to use their wallet using the connector that Ledger has provided in their GitHub in order to go and interact with the dApp. This is basically the process. Now, what they have figured out is there is a malicious code that was pushed apparently without testing, without confirmation that it is safe. So that opens up the doors for exploits. The exploit can happen in two ways. When the hardware wallet user tries to interact with the dApp, it can happen. Number two, even if you are not the hardware wallet user, just because you have that connector basically linked in the dApp, and like the dApp has integrated it. It doesn't matter whether you're the wallet user or not. If you're using the dApp, you still have chances of getting exploited. So this is now a two-way problem. One, Ledger had to quickly go and fix the code, remove the malicious code and put in the fix. Number two, MetaMask or any single front end, right from SushiSwap to RevoCash, who are all infected, they all have to remove Ledger, update their connector code base, and then put back Ledger in their front end. Otherwise, both parties have chances of getting exploited. So it's not really the wallet, hardware wallet being hackable or exploitable, but if you were trying to make a transaction during this process via your hardware wallet to a dApp, then you can get exploited. So this is for the Ledger users. But the dApp users are all inherently at risk because the connector is one way or other available in the front end.
Okay, so
your average morning in crypto.
Yeah, your average morning in crypto. Absolutely, well said. So Benjamin, we're not we don't claim to be security experts, but just for the layman on the ground, what should someone do if they've got a Ledger wallet? Should they just keep it in cold storage? Should they be looking
basically do nothing?
Do nothing. Just wait, sit on your hands.
Do nothing.
Now? Okay.
Yeah, basically everybody should do nothing. Basically, don't go and do any trades on the dApp. Revoke your MetaMask permissions or anything else that you have linked with your favorite dApps, and basically just don't touch your Ledger wallet for a day or two unless they make sure that it is safe, secure, the new codes are pushed, dApps have integrated into their front ends, Web3 authentication kits basically incorporate all of those. And then, you're good to go. I mean, a
Right.
few days ago, there was also this issue with Third Web. Third Web is like, Dynamic XYZ, who's like um, uh, smart contract third-party platform, which a lot of dApps have been using. They got vulnerability issues. So yeah, let's see.
Yeah. And we have a question directly from the audience from Eric Weinstein. Hopefully I pronounced that correctly. So if you haven't used a D app in the last month or so with a ledger, you probably should be okay. Is that right?
You should revoke permissions. It's always better if you're not using the dApp, you revoke your MetaMask wallet's permissions that is linked. Because every time you use your MetaMask or any other wallet that is in your browser in order to interact with the dApp, you are leaving behind a connection. It's like if you use a Web2 product and you sign in and you say, okay, for 14 days, I will remain signed in, then you are remaining signed in, right?
Okay.
But if you sign out, you are much more secure. If your browser gets hacked, you still have better odds that your mailbox is not getting hacked. But in this case, since you have that connection still made, it's better that you get out of it, wait, chill for a while, and then go back in.
Okay, so for the audience out there, scary times as always. As JJ said, this is, I guess this is just a normal day in crypto, but you should revoke permissions. And it sounds like as someone, I'm not as on the DeFi front, but anybody who's out there, if you're using these DeFi protocols, you should be revoking permissions on a regular basis just to protect yourself. And during this time, as this gets sorted out, just don't take any trades, don't take the risk. Keep that outside of revoking the permissions, just don't be using that wallet. And let's just let everything fall and kind of get sorted out. So, okay, well, Benjamin, thank you for that update. Obviously critical for many users who are out there using these apps. Let's get back to the price action. So, JJ, just to say, kind of recount what you were just saying. We saw we were at 43. We saw some push down. We saw some sell off now, maybe driven by what we're seeing from fear in the market because of this hack. And I think I broke in just as you were starting to look at the perpetuals. Is that right? Is that the chart you have up here?
So right now I've opened the order book. So we see like there was a ton of asks here. So this means if price gets up here, these red blocks here, those are sell orders, right? So this is kind of forming resistance. And this was happening before the hack news drop. So that was just kind of the catalyst that sent it down below 41 or 42,000 in the short term. But I think what this is all kind of connected to, I think kind of the bigger narrative rather than just that short-term price wick is what we see in the options market. So these contracts that you see on screen, let me know if you could see this.
I'm seeing, I'm seeing it now. Yep.
Okay. So these expire at the end of today. Later on tonight, these contracts will expire. And we see there's a max pain price of 42,000. So that means if price gets above here, people start losing money. If it goes below here, people start losing money as well, the people that sold these options. So I think what this is options market makers kind of trying their best to pin price in this range into expiration. We see it's like over $1 billion of notional value. So well in their best interest to pin price here if they can, kind of keep a cap on things. That was a convenient news drop that kept price from expanding above 43,000 for now. So I think just continued consolidation in this range.
Well, yeah. So just kind of unpack that a little bit. When we look at the options market, and if you can go back to this chart, so the max pain is where the market makers they make out, right?
Yeah.
Okay.
So they sold these 40,000 puts that expired tonight. They sold these, 45,000 calls, 48,000 calls, like all of these lines you see here on both sides are mainly options that they sold. So when they expire, if they have no intrinsic value, they expire worthless. The person who wrote those contracts get to keep all of the premium. So say they sold this, this 45,000 strike was probably trading for a couple thousand a week ago when we were getting that big ramp up. And now it's going to expire worthless. So they'll get to keep, say they sold 10 contracts for $1,000 each, they get to keep all $20,000 of that premium if price expires below it.
And have we seen this pattern before? I think earlier in the year on our Alpha Bytes podcast, you were talking about the market selling premium. Is this kind of similar behavior you're looking at now, or are we starting to see a shift perhaps in the behavior of the market makers and the whales?
I think it's a pretty common theme, especially short dated strikes like last week, like I said, price was ramping up, right? We all remember that. It went from 37,000 to over 44,000 in a couple days. So all of a sudden the premium, like if you needed to have calls to hedge, or if you just wanted additional long exposure and leverage, you're having to pay a steep premium for these calls, like the 45,000, for example. So like I said, they were trading for a few thousand. And if you already had long exposure, it became a really good way to just kind of add some risk-free yield to it, where if price keeps going, you're already holding spot. It doesn't really matter. Or you can add, say price just consolidates like it has been, you'll make this money by selling those calls. So I think it was just kind of a natural effect. Anytime things get that parabolic that quickly, you kind of see people rush in to sell their upside immediately while they can, and those premiums are juiced.
Okay. So this is telling us that is signaling that the market is going to continue to consolidate. The options market is signaling this consolidation is what the market makers are trying to do.
Yeah, it's in their best interest to have these calls expire worthless. Typically, if you're writing options, you have kind of a larger asset under management, so it's much easier for them to put up larger buy walls like this and kind of scare the, like we said, are these, we were talking about last week, does this actually have the intent of being filled, or is it just put there to suppress price? We don't really know until price gets in that range. But for now, you see it, and you don't want to be somebody with this much size's counterparty, right? Like if they're willing to sell it, why would you want to buy it? You don't know what they know. So it kind of scares the market, and it kind of creates like a self-fulfilling prophecy there, where people are like, well, I'm not going to buy because there's too many people willing to sell. So you wait for these kind of walls to be lifted, or for somebody else to push the price up higher for you.
Yeah. So on the last call, or our last episode, you were talking about how, perhaps Ray was, about how we were seeing some of the stacked sort of demand, and then it was getting pulled out.
Yeah. So
right.
On that run up, like you see these green blocks.
Mm-hmm.
So as we were running up, people were adding bid liquidity, saying, hey, I want to buy it at 40,000. And then you see they removed it. Just kidding. After price made the move, right? So you could call it what it is, but most likely manipulation some way or another. Like people knew shorts are vulnerable, so they're pushing price up. Shorts get liquidated, pull that liquidity. And now we might be seeing that on the reverse side here, where people are kind of hunting for longs and placing those large sell orders to kind of force price into those liquidation pools, or at least just pin price until the options expiry passes.
So what I'm hearing is that we've got the options market, which is signaling the market is trying to get some consolidation working. The perps is looking scary. There is no direction there, so it's really best to stay out of that. And I think we kind of ran through the spot pretty quickly.
This was a pretty large wipeout here in open interest. We see it dropped about $1 billion in a matter of minutes after that ledger news dropped. So this might, I mean, we'll see how today plays out. I wouldn't expect price to get over 43,500 or so today. I'd be surprised if we see that, just due to the options positioning tonight. I think they would probably wait till after the options expire tonight to kind of start bringing that upside in. But there is kind of what we were discussing 2 days ago. There are some bullish catalysts now that FOMC has come and passed.
Well, and I'm going to be asking you about the Dixie in a moment, but I just want to go back to that. You said they'll probably wait for those options to expire. So the Max Paynes felt they actually get to see that expire worthless. Therefore, they get to keep all that premium, and they can start this cycle over on a 30-day, looking to sell some premium, or perhaps see if they can engineer some additional liquidity on the spot market before selling some premium.
Yeah, like that ultimately goes to their coffers, right? So that premium expires. At the end of the day, all of a sudden they have more money now that they can play with, and if they wanted to get additional long exposure with that, buy more calls, do more spread trading, or even just buy spot. So they'll have the liquidity to push price up higher after that expiration if they want to. We'll see.
Okay. So let's go back to spot real quick. You've mentioned on our last couple of episodes, we continue to see whale buying. Are we still seeing the whales purchasing and accumulating in this range?
They are. So all week, here's the chart here. We see yesterday they were net accumulating again, and it's now been about 2 weeks in a row of just persistent whale wallet accumulation here in this 35,000 to 44,000 range. They've basically been net accumulating every day, so I think that's still bullish. I think that's a large reason why price didn't get that. Everybody was kind of waiting for lower over the past couple of days. That 40,000 was getting tested and tested and tested, But it seems like these wallets were the ones that were keeping price pushed up. They were just persistently buying spot as everybody else was kind of exiting, expecting the top to be in, or even going short. They were just kind of passively taking the other side of that trade and accumulating. I think we'll continue to see this until we get another leg up. Possibly they'll look to distribute at 48K, 50K in the future. Not necessarily tomorrow or next week, but I think that's probably when we'll see some profit taking there.
Okay, so we're seeing that the whales continue to accumulate. They're looking for some consolidation, which means it could still be a good price from their perspective to be buying. And really, if you look at the perps, it looks like they're trying to engineer some liquidity, perhaps from retail, who's maybe fallen into the trap, right?
Always.
Exactly what we told them not to do last week. If I remember correctly, we said, don't be exit liquidity. That was our message to the market.
The FOMC days are so enticing for FOMO, right? Like you feel like you're going to miss the move. Like the dollar was dropping down, Bitcoin was pumping. You have to get in now or you're not going to be able to get in. And then there's just always those untimely news releases when you least expect it that do this, right?
Yeah.
So we see here's Powell comes out, basically signals the Fed's ready to start cutting. We see the large run up, goes all the way to 43.6. And people are really FOMOing now, right? Like what if it gets above 44,000 and then it just gradually drifts, consolidates for a bit, distribution, and boom, news release, wick down. It's
man,
you could change out like the headline that we've seen this pattern 1,000 different times. It's just whatever narrative drives it that day forces these late longs out consistently.
I mean, you can't blame them, right? If you look at how Nasdaq and S&P 500 and Dixie is performing, you definitely would feel the FOMO to punt in longs and just keep holding. I mean, let's say you get a 10% drawdown over here at most. So how much is 10%? You probably get to 38K of sort, which was support levels and CME gaps that basically get filled.
Mhm.
If that is the downside you're going to get, and after that, there is potential run that could happen because maybe the market is lagging what is happening on the stock side and it catches up because it did so this year at one point. I think in November, basically it started rallying while stocks basically had finished a part of their rally. So Bitcoin lagged and it performed after that. So there's nothing to say similar will not happen in this case as well. So great. Yeah, sure. Maybe we chop for another week or so. But is the opportunity cost worth it given how DXY is performing and how the global markets are rallying? Nasdaq makes an all-time high and S&P 500 is about to break its previous all-time high. So that makes it very hard, in my opinion, for people to uh, bother about the existing premium. So, I mean, if you are a 1x leverage trader, I'm not even bothered about spot. I mean, but if you're a 1x leverage trader, it doesn't matter if you get a 10% drawdown here, and at most, if 10% is what you're going to lose, versus a potential run to 55K or 69K, given how stock markets are leading the whole game, what would you choose is the question.
Yep, that's a good point. Just don't be over leveraging yourself. Like
Exactly the point.
trades.
This is applicable only if you were doing a net of max 1x leverage or so.
People can't
If you
help
were
themselves
someone who
going in.
was trying to do a net of 10x leverage, then be my guest. Full CC's coffers. I don't care.
The only time you should be using like greater than 5x leverage is in situations like this, where you see these large liquidations happen to the downside or the upside
Yeah.
if you want to go short. But there's no
That is
like
where people fail to open the grids. You don't have to try to precisely enter. Just switch on your gridding system, let it fill. Look at gold, for instance. Like it pumped yesterday as soon as the rates came in and Powell started blabbing. It pumped and it's still in green. So the
it's smaller.
correlation of Bitcoin to gold has been quite strong recently, since October at least. So by that theory, if you go about it, would you long here or would you short here? At the very least, you would, like punt in a $100 portion over here and just hold it. What could go wrong?
That gold correlation is pretty strong. We've seen it kind of. I've seen it since 2020 at the earliest. That's when I started noticing it. It's gold tends to be the front runner. So we usually see these large breakouts in gold and then BTC follows with.
I want
I
to.
mean, in my opinion, unless we lose the Monday low, which is 40,237, in my opinion, I think, it's the problem of the bears. Bears need to be careful.
They tried to break it. Like you see these wicks here, right? There's 1, 2,
It's just not
3
happening. There's
tries.
4-hour divergences. There's crap load of buying that's going on in the market. So, I mean,
RSI had a nice reset.
maybe
too.
we chop longer. Maybe we chop longer. I'm not denying that.
Well,
Draw a trend line over here. Maybe we go sideways for a week, and then,
I think that's what they want. They want to draw in some more shorts in this range, right? And that'll ultimately give the fuel for that next leg.
I'm going to put you guys on the spot here and see if you had to make a choice, if you had to say how long is this consolidation going to last, given the factors we just talked about, gold looking stronger. We'll talk about Dixie in a moment. Benjamin, you just mentioned 1 to 2 weeks of chop here, but the downside, if you're using 1x leverage, not a big deal. Again, if you're staying safe, right? We're not talking about the degens going out there and opening 100x longs or shorts. But what is your perspective? How long is this consolidation going to last?
I think there are two primary deleveraging movements that have happened in this week. Number one was CME, and we have to remember that that is the largest perpetuals open interest exchange in the world right now for crypto. And CME has expiry this December. So traders will have to roll over, right? And we saw nearly a 30% drop within a few hours on the open interest over there, which means there's definitely a certain amount of profit taking that has happened. Or shops were getting out, or maybe they were hedging. It could be a variety of reasons. But there's certainly a sentiment that, okay, it was a great run. We've all gone up. It's hit 44K. We thought it will hit 48K, which was the monthly level of 2022, but it did not. Maybe it's good to take a break and come back after Christmas. So this sentiment is there, and it's highly pushed by a lot of influencers as well. We see a similar behavior on CME open interest as well, right? And you can already see Binance and Bybit everywhere. There is pure deleveraging of open interest. So I think that's what is happening. But if price fails to drop below the Monday low and it continues to hold and slowly grinds back up, such as in the channel that you're seeing. I mean, like if you look at entire November, you can call it chop, but it was basically higher lows and it was grinding up. So at one point, once 38K was broken, it just flew. So what I'm curious about is why do people think that this level where there was insane amount of buying that definitely happened with the spot premium will now suddenly deleverage at 44K. I'm talking about spot. I'm not even talking about leverage questions. Like they took an entire month to accumulate on higher lows as a vertical accumulation between 33K and 38K. And now all that accumulation was basically to ride another 10% move. That makes no sense.
So I want to bring it back to the question here. So it sounds like you're saying you're seeing signals that the market is starting to take a bit of a break as we head into the end of December, which is really just another week and a half, 2 weeks. But you're expecting that after that period, so maybe early January, you're expecting to see some interest come back into the market.
Yeah, I mean, it's all the moment we enter January. Now it's going to be anyone's guess because we still do not know if we will get the news, a positive news about ETF in January or not, and what kind of a reaction will be if there is a negative news. So a lot of risk of sentiment that I'm looking at is highly correlated with that, in my opinion. Like everybody's trying to front run each other in order to get out and be in safety. Uninformed traders are much lesser right now. So everybody is informed. Everybody has access to Tree of Alpha's news channels, and everybody understands what ETF situation is. I mean, people have been educated about ETF since 2017 and 18, since the first, VanEck filing started. Right? This is not new. This has been going around for nearly 6 years. So everybody now thinks that okay.
I want to say the Winklevoss twins. I think I saw a headline today. 2013 is when they tried to go for an ETF.
Yeah.
So 10 years. 10 years. Thank you, SEC. Sorry, Benjamin, go on. So you're saying the market is educated. We've got people, they understand that the ETF is coming eventually, and they're able to read. They're just a lot more sophisticated than they used to be.
Yeah, I mean, it's two ways. So the institutional side of the market thinks that it's coming, but they still don't know if it's for January or in March, or if there is going to be a surprise that SEC comes up with. They still don't know that, but the odds put it at above 90%, right? So it's all about odds. Like, we don't know exactly how the future is going to be. Now, with those institutional odds and with fixed dates that's been given to the retail, like using Bloomberg and all that, the majority of the bulk of approvals or delays are expected to come between Jan 8 and 15. I think that is the range. Now, the question over here is, we had a run from 30K all the way to 44K, and let's say you were even in in the last 10% of the range. Let's say you were in the rally from December 1st, you still probably made 10%. Now the question comes in like, okay, the spot premium has reduced, the basis has taken a hit, and the perps are a little bit overheated with respect to funding, but not with respect to open interest. What are you going to do? And you have CME rolling over, open interest, and there's a bit of delay and all of that. Now, what would you do? You would definitely take a bit of risk off and decide like, okay, let me go for Christmas and come back, and let's see what to do later on.
Well, you got fruitcakes.
Either this becomes an opportunity. This becomes an opportunity to run up a Christmas rally and drive everyone crazy while they are sitting in their Christmas dinners with the family and they cannot sell or buy or do anything, or just chop it up, range between 40K and 44K for another 2 weeks, and we see what happens in January.
Okay, so I'm hearing 2 weeks because the Grinch is going to steal Christmas. All the market makers are going to come in and take the toys and joy from all you traders out there. If you're not sophisticated, you're overly leveraged. JJ, I want a quick answer. I want to hear from you. Is it 2 weeks? Is it 4 weeks? What's your odds? If you had to do 90% odds, what's the odds on?
I think we're going to see price continue to chop between 40,000 and 44,000, maybe upwards of that, like 44.5 or so, until the end of next week. So the week of Christmas is Monday the 25th, and I think that week we'll see some wild price action because basically the futures stop trading. Like, people aren't going to be actively trading in TradFi after the 22nd, next Friday. So we have that whole empty week, the 25th to the 29th. And that's where it's easy to kind of do some wild price action because there isn't as much liquidity due to these people being away from their trade desks for the holidays, right? So I think once we get to that range, we'll see price break out. We'll either see the 40,000 wall fall and it'll start going lower. Like, I think also we'll start to see that ETF news really get priced in. So if it's definitely going to be approved, I think we'll start moving above 45,000. And these strikes will become kind of targeted, right? Like, it's easy to push up price when there isn't a lot of liquidity if you want it to. So I think we'll kind of see that come into play, or push it down if they know the ETF is going to get denied.
Okay, so when you talk about pushing up or pushing down, you just said you think it's going to range for a couple more weeks. Sounds like Benjamin, the end of next week. Okay, so what do you expect to see in the options market if that starts to shift? If you start to see things go bullish really quick?
You'd probably see some out of the money call buying. 50,000 strikes will probably come into play for the end of January. And then you'd see that followed up by large spot buy walls like we were showing here. Like, all of a sudden you'd see a lot of green. This would start pushing up. And you would see kind of people who were selling those 45 calls on the run as price starts to move into the range and expand higher. We would also see the CME premium, which I'm showing here. Right now it's about $400. So we would see that start to jump again. This would probably get back up above $1,000 premium.
But we just talked about all those guys sitting at home, or maybe they're at Ceres having a Jack and Coke. What I mean, are you really expecting that to make much of a move if those guys are taking a breather?
It would, because the premium would jump. So say all of a sudden they roll, like the end of next week, they roll that exposure to January and they're set. And then all of a sudden the price of Bitcoin starts pushing up. Now all of a sudden, if you don't have exposure and you want exposure on the CME, you're going to have to pay a steep premium for that.
Okay.
Or if you were short, then all of a sudden you're going to have to buy at much higher prices due to the premium jumping. Does that make sense?
I think it does. So, okay, there we have it for all the listeners out there that are wondering how long this consolidation is going to last. Nobody knows, as Benjamin just said very well, but I think the two guests here are saying they think it's going to last at least to the end of next week, maybe 2 weeks. But there could be some market makers in there to just be the Grinch that wants to steal your Christmas and your New Year's. But there is, of course, the other risk that we always talk about. I want to ask about the Dixie. What is it doing? We just had Papa Pal give his grand speech, which we always love to hear because he has so much insightful words to share. What is the Dixie doing, and is it signaling risk on or risk off?
The Fed devs rugged. Essentially, that's what happened yesterday. So look at this here. We were pointing out this resistance on the daily chart. So it got right up against that. The past couple of weeks, it was testing it, and then just a huge failure. Broke down to new lows here. It gave up the November lows. It's trading lower. And just on all time frames now, all longer time frames, it's looking worse and worse. So you see this resistance or momentum fading on the RSI. It's fading into the lower end of its Bollinger Band on the weekly chart. This is just not a good look. Looks like it's primed for sub 100 in 2024. If we go here to the monthly chart, this is even worse. I pointed this out back in August. There was an article I wrote in Espresso where I was pointing out the importance of this 50 RSI mark on the monthly chart and how this precedes large moves in the year to come. So look, we see in 2014, it regained the 50 RSI mark, and then look at that huge leg up. Here in 2017, lost the 50 RSI mark, and then we see the price action that followed. 2020, obviously everybody remembers that. This was kind of peak COVID right here when everything was crashing. They devalue it, it loses the 50 RSI mark and plummets to sub 90. So I think we're setting up for a huge move in 2024 for the DXY. Just based on this alone, I think we could see it possibly fall down to the 70 range, maybe even retest these 2008 lows at some point in 2008. But we'll see. It's not looking good for the dollar right now, which is ultimately very bullish for Bitcoin. Crypto.
Yeah, I was going to say with that being hitting that RSI point, Benjamin, what's your perspective if we start to see that dollar really start to crash? What kind of fuel are we looking at for the crypto markets?
There is no reason we should have some insane downsides. I still think for 2024, we're going to see 30K once, and then the next time we'll see 30K is in the next bear market.
Yeah, we will get that large liquidation run at some point.
Yeah.
The dollar will become oversold again, probably sometime around January, February, and then we'll see a huge bounce back. Look at this.
Actually, that might coincide quite well with the halving timing. And we always see some wild movements when it comes to halving. I mean, it's one time when options are supposed to be useful.
Yeah. Wait for that event to buy some long calls for sure.
Benjamin, unpack that. When you say options are supposed to be useful, what are you thinking the sophisticated market players are going to be doing with options during that point?
When it comes to option, I'm not the right fit. I would say it's more JJ who's the best.
Okay.
When it comes to options, but how I would go about it is, I think a lot of straddles will probably be taken up with some hedges, because if you look at even 2020 halving, we had a huge run up, and then we had nearly a 20% dump, and then it recovered back. We even saw Pablo selling crapload of BTC at 9,400 or something like that. And then it dropped back to 7,000 or 8,000 or something. And then it popped back up, took a few days of consolidation, and then went on a slow bleed all the way, and then pumped once again to 12,500, came back to 9,000. So halving is definitely a high volatile event. You cannot be sure what type of a retracement you get, but you definitely get a dump during those times. Could be for a variety of reasons. But the price recovers back up. I don't think halving, the moment of halving or the few days on the halving is a bullish event. I would
Okay.
not take up calls, but what I would rather do, like we are a market maker. So our thought process is always about how we can play with the order book, right?
Mhm.
So how I would go about is try to ladder up on as many call side bid order book as possible at as cheap levels as possible, so that when the wick action comes in, to the downside, like you end up buying all of those calls at dirt cheap rates, and when that same wick action picks up, you set up to make insane amount of money.
Mm.
So you would probably make like 10,000 percentage on that particular option.
Like
JJ, is
imagine if
that
you bought call options at the bottom of COVID or near it, right? Even after you
Yeah.
saw the kind of recovery bounce. Bitcoin's
Yeah.
trading at 5 to 6,000, and you said, "Hey, I'm going to buy some strikes for the end of the year at 10,000," and then by the end of the year, it's over 30,000. So you just have the ability to
Yeah.
multiply in those mass deleveraging events where you know what's coming. Like if you've played the halving
Yeah.
cycles enough times, you know how this price action works. There's going to be a large shakeout that basically deleverages the entire system, and that's your opportunity to get long. It's no different
And the
than
good thing is, unlike the other events where you do not know when it may or may not happen, when it comes to halving, you have a concrete date. At the very least, you know which week it is going to happen.
Mm.
Mhm.
So if you just buy even a 2 week expiry, or let's say multiple days of 3 day expiry, or that specific month's expiry, you're going to make bank. Only thing that will matter at that point is about how you ended up laddering on that calls in order to buy dirt cheap. You need to be able to capitalize on that single downside wick that will come in.
Yep.
Then you get to make really good bucks.
The thing is too, is if we get a crash, like look what happened during COVID. So here's February 2020, the dollar started selling off, and then it had this strong rebound, and the dollar. This is kind of the dollar milkshake playing out, is where all of a sudden everything starts crashing, and there's a flight into dollars. The problem with that is that the Fed's response to that is telegraphed. We know that they're going to devalue it if we see this kind of crazy price action in dollar where it drops and then starts ripping higher. When it gets to these points where the entire financial system's breaking, they're going to devalue it. Like that's what they did in 2020.
Yeah.
We know the playbook, right? So if you see the dollar start all of a sudden jump to like 108 again, gets to the top end of this Bollinger Band, everything's crashing. That's as good a sign as any that that's the time to start getting that really long dated long exposure, because you know what's
Yep.
going to happen. They're going to print. It's their only option.
Yeah. Basically, the doji you see here, the one that I have highlighted, the red doji candle, that was the halving week.
Do we have the right chart pulled up, producers?
Yeah,
Make sure. There we go.
some chop there.
So
Yeah,
that was the
having
halving
itself
week.
doesn't really cause the major breakout on the day itself, but
Correct.
look at that price action that follows in
Yeah.
the months
Yeah.
to come.
Okay. So here, I want to summarize where we're at, and then I want to talk a little bit about some opportunities, potential trade ideas that you guys have, and I know we have a couple coming in from the chat here that I want to hit on. Everything seems to signal we've got consolidation. If we look at spot and options, excuse me, and perps, we just looked at the Dixie. It's potentially giving us a massive bull signal if it continues to drop down. That would just potentially add more fuel going into next year. But you guys are kind of expecting some chop, at least for the next week and a half, 2 weeks, unless some market makers get greedy and pull a Scrooge on everybody, so that they can really drive the market wild. So that's kind of where we are. That's where we're set. My question for you guys is, what trades, if any, are you looking at? Is there something that you're saying, okay, this is a good time to open up? You just talked about opening longs, but that looks like that's more of a 2024 event. If we're in a consolidation period, last week we talked about don't be exit liquidity. So I want to know, is there anything you guys are looking at right now, or is this a good time to be sitting on your hands with your dry powder?
Look at this ETH. I pointed it out like the past few episodes, but it keeps churning along. So just from Tuesday alone, it's up about 10% plus. I think it's just going to keep going if this consolidation continues, as long as we don't lose 40K. I think ETH is probably one of the easiest trades you can make. Even if you want to be super safe, you could hedge it by shorting futures. And like I said, this is trading at a discount to spot. So you basically get all the same exposure as ETH at about a 20% discount or so. And you can hedge that by shorting ETH futures and just literally pick up free money. It's just sitting there.
So yeah, we've talked about this trade a couple of times. I think there was the spot buying, which was just buying ETH with the Grayscale Trust. And then you're saying maybe a little more sophisticated just to cover some of your risk and be able to I'm sorry, just explain that one more time, unpack that for the audience.
So ETHE, this is a Grayscale Trust. It holds a certain amount of ETH, right? And basically it's almost, you could take the price, and this is about 19,300 or so. That's not an exact amount, but roughly, right? So if you buy one of these, or if you buy 100 of these rather, you're getting the same exposure as a full ETH for around $1,900 as opposed to $2,288. So that's basically whatever, $350 or so of risk-free that you're just picking up. And then if you want to hedge it, you could short ETH futures at 2,280 to hedge your downside on the ETHE. But there's that $300 gap there between what you're paying for the ETHE and the current price of ETH. That's quite literally free money.
Like, that's an interesting trade. Free money. That sounds too good to be true.
No, it is. I mean, this was the case with GBTC earlier this year.
Right.
So look at it, went all the way down to, because there was all that forced selling, right? So after FTX collapsed, 3 Arrows Capital, they were just stuffed to the brim with GBTC shares. So it fell to a steep discount because the market knew they were trapped. They were going to have to sell this so they could say, all right, we're not buying to you until you're actually forced out of this trade at the worst price possible. And it was trading at over a 50% discount to spot in November of last year. And then look at the way it's jumped up now.
Yeah.
So this was a very popular trade in January, as people were just buying GBTC and then the whole year shorting futures against it and just picking up that free money as it went. You know, Bitcoin went up about a little over 2x. GBTC is over 4x. So it's just multiplying your gains.
I mean, GBTC, the chart, the way it looks, right? I mean, JJ, can you go back to the chart? Mm-hmm. If we look at it, you'll notice that right now its price has gone up beyond that 2022 March levels. So if you look at BTC's price at that point, it was around 48 to 48.5K or something like that. So GBTC is back to being on a neutral or low discount or a premium or however we could call it as, and has taken up that liquidity. So that's why I still believe if we are catching up with GBTC one way or other, then I still think we need to get to that monthly liquidity. So then the question becomes like, okay, does the ETF news come in? Does it get approved? Does it get delayed? And what kind of a behavior follows as a result of the news and the sentiment that comes after that? That is anybody's guess.
I think there's maybe like less than a 5% premium in this now or so. Definitely less than 10%. So this is just closing because the Grayscale, they won their case against the SEC, right? So they ruled that it was against the law for them to approve the futures, but not approve the spot ETF. So they're going to have to approve this, unlock all that liquidity, and allow this to actively trade as a spot ETF, which means rebalancing. So at some point, I think it's around 600,000 BTC or so that they hold in this trust, and that'll become distributed. And then I think we'll see some strong down pressure on BTC as this starts to match the current price of the underlying as ETFs do. So like as an ETF
so you think they are going to take it up and start selling?
They have to. So the way an ETF works is the underlying price has to be at par, or the and movement in spot markets because of these ETFs. Even just if it was just the Grayscale ETF live, the amount of Bitcoin that they hold, that's going to start being exchanged openly as opposed to just sitting in a trust, not moving at all.
So it's an interesting scenario. I think
that sounds like cheap calls to me. Cheap calls.
It's definitely going to cause some down pressure, especially when it opens. I don't think it'll be trading at a premium, so they'll probably have to sell a lot of it to rebalance, and it's going to offer some nice opportunities.
Yeah, but it also, I think, if we continue to see some of those whale accumulation, right, it could be absorbed on the spot market, and that it could reverse pretty quickly, and then there could actually be the opposite effect after some period of time. How long would you expect that to last, JJ? Would that be a month of sell pressure, a quarter?
Yeah, I think it's probably going to be a couple months there because it's literally 600,000 Bitcoin, right? I think there's a
Right.
lot of demand for this, but everybody who was long GBTC from these lows, when it reaches a par, these ETF gets approved, they're going to be exiting this trade, right? Because look how much upside you've already have. You have to book those profits.
Yeah.
So now does the demand outweigh that supply that'll be coming onto the market? Probably not, because it's just so massive. I would be surprised to see it just continue to run upwards forever. Probably drop back down, consolidate some.
Yeah.
It's hard to say right now. It really depends on where price is trading out when these things actually go live.
Sure. Yeah. I mean, again, we're playing with probabilities, not certainties, and these are just trying to, I guess you could say, read the tea leaves from the data. So I think for anyone out there, I think the one of the best lessons you can get from listening to these two analysts is to really ask yourself, how am I thinking about the market with the data, rather than looking for an explicit signal to buy or sell for your portfolio. But Benjamin, I want to come back to you. Are you looking at specific trades? Are you more focused on how to, put yourself in a position for 2024? Oh, Benjamin, you still there?
So there are two ways I'm looking at.
Okay.
Yeah, I'm still here. Can you hear me?
Okay. All right. Good. No, I can hear you now, loud and clear, nice and crisp.
Okay. Okay, great. So there are two ways I'm looking at it. The most important trade I'm looking at is the halving volatility trade. I think I'll take up a sizable position on options at that point. That is one trade that I'm looking at. The next thing is obviously to accumulate as much as possible a futures position as low as possible on BTC and ETH closer to 40K, but potentially lower. I do not think we will reach 30K this year. I do not think we'll reach it quite soon. It would depend on the ETF news, but potentially, definitely, I think in the next 6 months or so, we are going to touch 30K again. So that would be the place where I pick up a lot more spot. But until then, it's going to be a futures game.
Wait,
But that is about BTC and ETH.
I just want to hit on one point. You mentioned, I don't think we're going to hit 30K this year. Obviously, in the next week, we talked about the consolidation, and then sometime next year. What data is driving that sense that we're not going to go that below? I mean, is it everything that we shared today, or is there any other information that that maybe is driving that opinion, that perspective?
It's very common to have a 30-40% drive downs. And if you look at it, if you look at 2022 data or 2021 data, or even 2021, 2022, even this year, 30K is the most important line. There's nothing more important than 30K. Okay, like you can go wherever you want, but 30K is the line of sand. So you lose that, then we are getting ready for a lot of pain. So the worst case scenario is that as a result of the GBTC deleveraging, or let's say the Mount Gox or whatever it is, 30K is going to be the real test. So that is like my worst case scenario when it comes to the large pullback we could get. Of course, this does not account for a COVID-like event or a black swan that everybody from the macro markets are sitting and talking about. We do not know what will happen, but based on what we have, how the market structure is built up, I do not think this is similar to 2019 rally. I think it's more similar to what 2016 has been building up. That would be the analogy, I would say. Given certain assumptions like that, 30 to 40% corrections are not uncommon with Bitcoin. Even in an uptrend, it's always happened. So we saw it even in Jan 2021 after the run to I think 32K or 33K. We went back down. After 40K, we went back down to 30K, and then we started running back up. So profit taking always happens, and I think that is one of the situations we'll find next year in. And after halving, anyway, we go into a long consolidation. Then we have to see how things go with the Fed rate cuts, if that is, making the macro market bearish or bullish. But it's quite clear, if you missed out this year, you're going to have one last opportunity probably next year. And then there is nothing that's going to stop it.
Yeah. Okay.
I think there's going to be a lot of FOMO in January for sure. Like they're going to test your patience if you're sidelined. but you are going to get that buying opportunity. Like I see a lot of similarities between now and late 2019, early 2020. I kind of see this 40 to 50K range is similar to the 10 to 12K range back then. So you see price move up here. People thought the breakout was coming. And then obviously we had the untimely COVID events start happening. We eventually got that large drawdown. Like, are we going to get another 70% drawdown? Most likely not, but I do think you get an opportunity in that 28 to 32K range at the very least at some point by March of next year. As crazy as that seems right now, markets change rapidly, right? So we're kind of at max, not max, but we're nearing max positive sentiment and euphoria now. I think the ETF news would probably be the thing that sends us over, brings us towards 50K, maybe a bit over that. And then inevitably we're going to see the wash down. And these lines work as a magnet over time. Price always finds reversion, right? It always returns to the mean at some point. And we will see that. And you see some similarities here with Dixie. It's selling off as it did in early 2020. And I think we'll see that boomerang effect bounces back. Even if you look at the S&P, right? So this kind of looks like a breakout, but also this could be a double top forming. In 2020, we saw similar setup here, right? So it was breaking out. People thought it was gone forever. And then look, large drawdown.
Yeah.
At the same time, back then, NASDAQ was trading at all-time highs as it is now. Let's see the VIX. The VIX was severely compressed at that time as it is now. So it was right around this 12 level. There was a large end of the year expiration as there is now. And then we just saw it take off. And I think you'll start to see these signs start to register themselves. Like, look, 2019, we had a spike up and then it faded back down to new lows. This year, we had a large spike up, fade back down to new lows. I think the kind of moment of liquidity sucking is coming in traditional markets at some point next quarter. So I would be on the lookout for that. And I think that's what's going to provide your opportunity for cheap Bitcoin. Is it's going to be extremely scary. You'll see kind of, who knows what kind of event it could be, but there's going to be a lot of doomsday posting and whatnot. But just remember, these things happen in cycles, and this is kind of inevitable. We've gone 4 years without any major crashes. Probably overdue for one, even if you look at oil. So back in,
you're just bringing up all the charts. You're just gonna.
there's so many similarities. Like, look at this.
Yeah.
Oil was consolidated, made a top in 2018, consolidated at lower lows, and then fell off a cliff. Now we see oil made a top in 2020. It's been consolidating at lower highs and looks like it's about to fall off a cliff.
Right.
Like, there's a lot of parallels here that you see. And I think this 40 to 50K range is similar to the 10 to 12K range of 2020. And I do think we'll get that wick down followed by highs higher than you can possibly imagine right now in the second half of 2024. So be prepared for that wick down. If you're sidelined, don't give in to the FOMO that comes over the next few weeks. Just chill. Have a plan.
Well, I want to ask you guys, because we had a couple of coins asked about in the comments here. And just to finish off today's show, more on the altcoin side, I had WorldCoin WLD and I had HSBAF, which I'm actually not familiar with. But my question generally is JJ, you talked about a trade, just looking at ETH. If we're consolidating for a week and a half, if you're looking at trading this range, is this an interesting time to be looking at some of these altcoins?
You could.
Yes or no?
There's a lot of risk.
Yes or no?
I am not personally. So what I want to see is the dollar break down and accept below 100, and then I'll start looking to play the altcoins a bit more. But right now, like, I'm waiting for that ultimate blow off top in the dollar, followed by the true mean reversion to sub 100 permanently.
The risk just isn't worth the squeeze.
Yeah, I think so. A lot, and altcoins have become very overextended in recent weeks too. So that's something to keep in mind. Like, WorldCoin doesn't look terrible, but it's up a lot. It's almost tripled since September. So you're due for mean reversion
but its
there.
economics are so horrible. I don't see why anyone should buy and hold it. It's as equivalent as buying Dogecoin and hoping you'll find some financial freedom over a period of time. I mean, Doge is still a meme and it has its own value in a different way. But WorldCoin has a very clear economics on how the token works, and I simply see no solid reasoning. The only reason it pumps is because it has good market makers who have incentive to push it up.
This looks like
okay.
It looks like
look at that downside candle basically you saw after that huge candle wick up, right? If you go into the previous time frame that you were in, you can very well see how systematic that selling was in August. So that's not your retail doing the job.
Yeah.
That's algorithmic.
Okay.
All right. So there is nothing too attractive about WorldCoin. But if someone was to look into alts, the key would be to look into coins that showed strength this year that led to rallies. So if you take 2020 cycle, you should remember Chainlink, which was actually doing fantastic in the last bear market, not this bear market, in the last bear market. And once the 2020 cycle was starting up, Chainlink did fantastically well. It went really well. It did a very good job. And this cycle as well, we saw Chainlink to be the first one to break out of the consolidation, which was nearly 18-month consolidation. And this happened together with Solana. So if you are looking for a large cap where you think in addition to BTC and ETH that you'd like to focus, there is no reason you should look at something else other than Solana and Link. Maybe add Injective because it's doing pretty well for an L1, and it's got a lot of narratives and good backing and very good market makers. So it can do well, and it's done well. It's been leading the market this year as well. So focus on tokens like those, so that when you get the largest pullback, these would be the tokens which will bounce back faster as well, because they're already sturdy and they have the stable nature and has reasoning for why they should do well.
Yeah, we covered this back in October in Alpha Bytes, and it's just really been performing strongly. Link.
Yeah.
It looks like it's going to have a major 2024. Like you see this, such a long period of compression, these high volumes that were traded at the lows. It's just beautiful chart. It looks like it's going to make a run at those highs in 2024.
I mean, whatever chart you see that looks similar this way, right? Like if it had a 18-month consolidation, that's a no-brainer.
Pure accumulation.
There are probably a lot of tokens that have not broken out in that way for now. Like if you take CRV, it has not broken out yet. I think AVAX broke out, but CRV has not broken out. But CRV has its own baggages due to its founder. That's a different issue. But if you just go by technicals, like this is the type of chart you have to look for if you want to trade a breakout. But if you want to look at 2024 to enter fresh on altcoins, like you have to look at these coins which did well, showed strength this year, because it means that is where there is a fundamental focus, there is a fundamental belief that is driving large volume to go and sit there. And that could probably give you the 4x or 5x gains for the 2024-25 cycle. But this is still for large caps. If you want to do even better, then it is always small caps and micro caps. But that's a different game. And I suggest that it's right now the time to start looking for them, searching for them, and finding out who has the best base case for it.
Okay.
So the next 6 months or 8 months is when you have to do all of the research and get ready, because the narratives keep changing and there are new narratives coming in. Look at Ordinals, for instance. It's been doing fantastically well. And if the BTC ETF narrative goes on and it works, then there is no reason stacks or anything that is related or performing like a L2 of Bitcoin stays on sidelines. It's probably going to do a huge beta to Bitcoin, right?
Okay.
So those are the type of projects that you have to look at and probably get a piece of it and see how you could do something in that angle.
I think if you're a listener and you're asking about trade ideas, you just heard. I can't even count the number, right? We talked how to be looking in the next week and a half to 2 weeks with ETH. You talked about positioning for 2024 and the potential revisiting of 30K sometime in maybe Q1, Q2 of next year. And Benjamin just gave you a perspective along with JJ on how to look for L1s that are lower risk are still going to give you a great return. And the research that you should start doing if you're going to go further down the risk curve. I think that is a great way to wrap up this episode of the Trading Pit. Guys, thank you so much for coming on. Crazy day with what we're seeing with Ledger. For all those who are out there, if you've got a Ledger, go back to the beginning of the episode. Benjamin's given some ideas for how to stay safe at this time. Any of these risk events are always scary for anybody who's actively using these protocols. So make sure that you're playing the game safe and being smart with your Ledger. And with that, we're going to wrap up today's show. Again, I want to thank JJ and Benjamin for joining us and breaking down the trades, breaking down the markets. If you're out there and you've got questions, leave them in the comments. You can follow us on Twitter. You can do it here and YouTube. But wherever you do it, just give us some thoughts. Let us know what's on your mind and what else you want to look at. And with that, we're gonna wrap it up. And always remember, as I say with every episode, keep some dry powder. All right, this is Marconi White signing off.